Welcome to the Real Estate Show with Pat Lopez, where we talk everything real estate. Today, my guest is Anthony Sanchez from Oakmont Commercial. Anthony, welcome to the show.
Thanks for having me, Pat.
Okay, so we're going to get into what Oakmont Commercial does, why you're on the show, because it's unique. It's a little bit of an out of the box, not your mainstream. But I always ask all my guests, just to tell me, how did you get started in real estate? I know you started in, mortgages. Yep. So tell me your story, 5 minutes or so.
Sure. So I got into the mortgage business straight out of high school as an intern back in 2016. And I've kind of bounced around in a variety of different roles and have now landed at Oakmont Commercial.
Okay. And now we're going to jump into Oakmont Commercial. Now, what is the prime focus? And as I understand it, which I could be completely wrong, but it's when your bank says no, this is not hard money. It's sort of like in between your bank and hard money. It's like that landing place that could give you a little bit better terms and better rates, right?
Yeah, absolutely. So we're a small balance commercial lender focusing on the niche of the somewhat unbankable. So typically our customers are people that for one reason or another can't get qualified by a traditional bank for traditional commercial financing. And that could be because of a slightly lower credit score. Maybe they have poor payment history. What we do is called story loans. So we find those people that may have an interesting story and find a way to accurately evaluate the risk and see if we can lend on it.
Okay. Now, because if you do a regular commercial loan, unless it's like an SBA type of loan, you're putting 25% down, those kind of things. So with this, are the down payments like that 25, 30, 35% down? Are they a little bit more because the risk is a little bit, higher?
Yeah, so it correlates to the risk, right? So because these are slightly more risky than a traditional conventional commercial loan, we're going to see 30% and up.
Okay, so a little bit more down payment.
Yep.
Okay, so then the next question would be, you're not buying a primary residence. This is strictly an investor type of loan, correct?
Yeah, I would say a majority of our clients are business owners that occupy the commercial space that they're going to be financing. We do see a good bit of investment as well. People that have, let's say, mobile home parks or larger scale multifamily, stuff like that.
Okay, so but like some of the sweet spots would be, I own a business.
Yep.
The building's up for sale. That's something that would be really good because then you would have like rental history there already, showing that, you're able to make those payments. And a lot of times, buying, your payment's almost the same, maybe a tick higher, but you're showing that ability, right?
Exactly. Yep.
Okay. Now, as far as, give me some examples, because you did mention like a mobile park, whether it be a multifamily, if you own a business, what other types of real estate do you lend on?
Yep. So we do restaurants. We stay away from gas stations. We don't do too many churches, but primarily we're focused on warehouses, commercial, retail, that kind of thing.
Okay. Now, as far as we know the down payment may be a little bit more, interest rates, typically, what would they be? Like, 2-3% higher than a bank type of rate? Like, you tell me, what would that look like?
Yep. So as of now, we're seeing rates, and of course, everything is dependent on the deal itself, right? So the riskier the loan, riskier the borrower, the higher the rate's going to be. Anywhere from, let's say, 9.99 to 12.99 or 13%.
Okay. So typically, that would only be like 2 to 3
above
a regular, bank. Okay. So, and you keep on saying, so you're really evaluating the individual. So if they have really good compensating factors, but for whatever reason, something just didn't work with a bank, you're doing that. So
correct.
So it's truly a story loan. And from what I'm hearing, everything is, individual. It's like really based on that individual, right?
Yep. That and also the asset. I would say for the repayment portion, it's not just the individual, but also what they're financing. For us, we have to consider worst case scenario, right? If they don't pay and we have to take over this property, one, are we going to be able to rent it and cover our expenses for giving them that loan? And then two, is it a property that if we had to sell it, we'd be able to sell? In addition to, the best case scenario where they're going to make their payments all the time.
Right. Okay. So it's the story, it's the asset itself,
correct.
The property, does that all make sense? Okay, very good. Now, is there anything else? Am I not mentioning, anything else out there that, people should know, because primarily this goes out to real estate agents in reference to Oakmont?
I would say for Oakmont, one of the biggest trends that I've seen that's different from the residential world is that right now in the residential world, we see like 95% purchase business and then 5% refi. Whereas in the commercial world, it's flipped completely. I think a lot of that is due to all of the debt that was issued in the 2019, 2020 when rates were low. And now we're seeing people have to refinance out of those terms. So for realtors and people in the industry, one thing to keep in mind is that those opportunities are probably more readily available on the commercial side than they would be residential, at least for refinances.
Okay. So that's pretty interesting. I didn't think of that. So you're talking about, maybe somebody had a loan that was, 4 or 5%, because they ended up getting it in, 2020 or 2019. And typically the commercial loans, they're for 5 years. It could be, they could, potentially recast, or it could be a balloon. And if it's a balloon, that means, hey, you have to find financing somewhere else.
And one of the interesting things that we're also seeing is that the banks that initially issued these loans are saying, hey, we're going to de-risk and not go, we're not going to refinance. We're not going to give you an additional set of terms.
Right.
So go finance it somewhere else.
Right. And then that's where you're seeing that's the refinance on your side.
Exactly.
Where they're going to a traditional bank, and because the bank standards just became so much higher now, now they have to call Oakmont. Okay.
Exactly.
Okay. That's very interesting. I didn't realize. I knew that, the recasting.
Yeah.
But, I don't do commercials. So.
Also, too, there's a lot of cash out opportunities for business owners, right? And if you bought your property in 2019, 2020, values have appreciated drastically.
Right.
So not only can you, let's say, get better terms because you have to refinance anyway, but you can also get a little bit of money for working capital, improvements to your business, so on and so forth.
Okay, great. Okay, so that was pretty interesting stuff. Anything else or that we should know?
No. If you need anything commercial related, don't hesitate to reach out.
Right. That was my next question. How will they get a hold of you? Phone number, email?
Yeah. So you can reach me on my cell phone at 610-905-5947. You can also follow me on Instagram, any social media. My handle is @AntDoesLoans.
@AntDoesLoans.
Yes, sir.
Makes it pretty simple for you, right? Well, thanks for being on the show. I've been wanting to have, Oakmont come on. Full disclosure, they are a sister company of, Quain Oak, or under the Quain Oak umbrella. And I have done it, well, not me personally, but I have referred a couple of people over that fit. They were outside of the box. They had an opportunity. It was actually a grocery store owner that she ended up buying she owned the business, and she had the opportunity to buy the building, which had the store where she was paying rent, and there was 5 other apartments.
Oh, wow.
So, and it really worked out well for her because, the business was newer, her taxes weren't as strong, and it just worked out, and Oakmont did it. So that was the
best case scenario.
Yeah. Thank you, Anthony.
Yeah.
Well, that's the Real Estate Show with Pat Lopez. Be sure to follow the show on Facebook and Instagram, and subscribe below. Really helps out the show. Really have some good people coming on, sharing their insights, sharing their knowledge. Also, leave a comment. Tell me some show topics you'd like me to cover in the future. Remember, this show